I want to start off with McDonald's, if you don't mind. You have a overweight rating, a price target of 320, implies a 15% upside, a bit higher than the street has it. What are you seeing in this company after some of its struggles earlier this year?
Yeah, morning, Frank. Thanks for having me. What I would say is that there is going to be sales deceleration this quarter. McDonald's has sort of been most vocally cautious about that over the last couple of months. That's both in the U.S., but also internationally. And we feel that on a relative basis, this is still sort of a share gainer, despite the fact that you're getting into a slower sales environment this year, and that versus a lot of the peers where the environment is more value oriented, the McDonald's still comes out of that in a better place versus a lot of the main competition.
You know, a lot of times when we talk about McDonald's, we talk about higher food prices and, the consumer being stretched. And sometimes we forget their core business is actually franchising. It's not actually making food, it's franchising. Estimates have franchise revenues increasing 10% higher year over year. In your mind, is there a danger of it not actually meeting that level? I mean, higher for longer certainly impacts people who are trying to buy a small business, which a McDonald's is.
The economic proposition of owning a McDonald's is still quite attractive, right? We've gone through several years of very high cost inflation in the U.S., but also around the world, right? So opening new stores globally is still kind of a key driver of that franchising revenue. And we don't think that that equation has necessarily changed. You can have small changes quarter to quarter. I'm not as worried about that in the first quarter. And I think that in the long run, there's still, a very attractive impetus to open McDonald's. And thus that kind of drives the royalty revenue for the company over time.
By the way, we're just showing the price increases for Big Macs, fries. Even here in the UK, you do see higher prices for all those things. Sometimes you get a little bit of sticker shock. I want to move on to Starbucks. Your price target there, 115, also overweight, implies a 12% upside. You are also higher on the street here. What are you expecting from Starbucks? Again, a higher end coffee chain. McDonald's more on the working class, lower end, but Starbucks certainly on the high end.
Yeah, I think this will be a relatively difficult quarter for Starbucks, to be honest, right? I think that you could see perhaps negative same-store sales growth in the U.S. You could see that in China as well. I think investors are well prepared for this because there's certainly a very difficult comparison versus last year, which was actually quite strong for Starbucks in the U.S., but also globally, right? So I think this could be a tough quarter. I think that they may have to adjust their annual guidance as you think about some of the pressures in the U.S., some of the pressures in the Middle East, some of the pressures in China, right?
Yeah. Brian, you mentioned international. You get about 22% of revenue from international. So what are you seeing or hearing in China? What are you hearing in the Middle East? I know in the Middle East, Starbucks actually facing some Western-focused boycotts.
Yeah, those have continued, right? I think we may be seeing a bit of easing, but not really substantially. There is still some issues to work through there. And it's not unique to Starbucks. This is across a lot of the brands that I cover, as well as a lot of other American brands. So it's just going to take time to work through some of those issues. In China, I would expect negative same-store sales growth this quarter. It's really competition, but also just the macro environment. In fact, I think that the macro environment is more of the driver. You just saw Yum China post negative same-store sales for the first quarter. I think that will also take time to work through, right? But this is still it has a very good brand position in China that I think is advantaged over time, although it's more premium, certainly.